Hey, this is Anthony, and I'm the host of What They Did Not Teach You in School, the podcast that interviews people to get their wisdom recorded so that hopefully you could learn some things that are not taught in school but should be taught in school. I'd like to remind people that a lot of the things talked about on this podcast relate to investing and finance. The purpose of talking about these subjects are to hopefully inform people and educate them on financial literacy, and to entertain people with some do's and do nots. This is not to be considered financial advice. Before trying anything that you learn on the podcast, be sure to consult a professional. Hello, and welcome to this week's episode of What They Did Not Teach You in School. This is episode number 41, and we're sitting here with Danielle Graham. Thank you for being here. Super excited. Your reputation precedes you, so I was very excited for this episode. Thanks for joining us.
Thank you for having me, and thank you for being excited.
And then I also have my Robin for the day to my Batman, Kieran McConnell. Thank you for showing again, Kieran. It's always a pleasure to have you on here.
Thank you. Third time's the charm.
Before we get started, I'd like to plug our sponsors. Today's episode is sponsored by Creator Club Studios, a platform that is advocating for the creator economy here in Canada and connecting brands with creators and building that community so that creators have a place to come, collaborate, and learn from each other. I also want to thank Valentina, who's behind the camera right now. Couldn't do it without you. Thank you. All right. Danielle, for the people listening right now, this podcast was started about 4 or 5 years ago, back before podcasts were cool. And it was my way to be able to teach people about things that are not taught in school. Like it was always been a big fascination of mine why personal finance is not taught in school, or that career development is not taught in school, or emotional intelligence and interpersonal skills. All the stuff that is actually useful outside of high school is not taught in high school. And so that's where it kind of like started, and it's developed from there, because as I've gone on and maturing in my life, I've realized that there's more things that people should know that are not taught in school. And here we are. Like about 2 months ago, Kieran told me about Hugh. That's when I first started looking into, I did a little creep online of all your websites and your LinkedIn and everything like that. But then also we had a podcast just like a month ago with Michael Morsink.
Or Alex
Morsink, sorry.
Yep.
Alex Morsink. And then he also mentioned you, and you're on his board, right? So small world. And then I just heard today that you know Michael Bancroft. Anyway, the Toronto startup ecosystem is very small, and it's a pleasure to have you here.
Thank you for having me.
So for people that don't know, tell us a little bit about yourself.
Oh, okay. Where do I begin? I like to start with, I grew up in Africa like Lindsay Lohan and Mean Girls.
Okay.
Just, clear that up. Sometimes when I don't say it and people don't know that, they find out like a year into my friendship and then they get upset. They're like, what? I didn't even know all of this about you. So I like to just start there.
Yeah.
My dad's from Calgary. My mom's from Vancouver, Victoria. I grew up in Namibia, Ethiopia, and moved to Toronto for undergrad.
Wow.
And so the ironic thing about being on this podcast is I spent way too much time in school. But as soon as I got out, I was ready to go. So.
Okay.
Yeah.
And so what did you study in school?
So I did my undergrad at U of T in international relations.
Mm-hmm.
Then I did a master's of African history focused on the Angolan Civil War. And then I did an MBA.
Wow. After all of that, then you went to the dark side and did an MBA.
Yeah.
What made you want to do that?
I think I realized that I was an extrovert and I could not spend another day in the library. And so I was kind of noticing all the MBA students, doing presentations and having a lot of fun. And that looked like a lot more of my style than piles of books.
Completely understand that. And so one of the main interests for having you on the podcast today is a lot of our following are entrepreneurs, some wanting to be entrepreneurs and developing into that, some people who've just started their own company, and some people that are now looking to scale and learning tips and tricks for that. And so I understand that you started your own venture fund. Is that true?
Yes.
Can you tell us a little bit about how that happened?
I mean, it was kind of a process of where am I most obsessed with solving a problem? And so for me, I started my kind of educational career as a founder. So I actually was part of the Laurier Startup Fund, and I was at Communitech. I went through the entire tech ecosystem as a founder until I exited after 4.5 years. It's a whole other story. But essentially, I became obsessed with the idea of supporting early stage founders, particularly women, who had a lot of gaps when it came to being able to access capital.
And when was this? Like, what year roughly did you first get the bug, the entrepreneurship bug?
It was like, 2014.
2014 was actually just when like a lot of the startup ecosystem like really started ramping up in Toronto. Like
It was back when I was flipping lemonade stands.
What, you were flipping lemonade stands?
Yeah.
Yeah, Gen Z.
Gen Z.
We don't understand.
No, I'm a millennial, so
Same.
I trust on Kieran to give me the Gen Z like vibes.
Gen Z consultant.
Yeah, thank you.
Official one.
Yeah,
Yeah,
you
we
are.
Need, we need an alpha next, right?
Yeah. Is that what the next generation is being called? Alpha?
Yeah.
Oh, interesting. Being a millennial used to be like a cool thing where we were like the hip people, and now we're like,
We're full chuggy.
yeah. My younger cousin the other day, I tapped my iPhone wallet, which I did for the first time, and I was like, wow, technology. And she's like, Anthony, your old is showing. And it was just, I'm like, that was the first moment in my life that I was like, damn, I'm getting old.
Well, do you know about chuggy?
Who's Chugi?
We are chuggy.
Why?
That's what they call us.
Why?
They say we have the side part instead of the middle part. We like friends. We like lasagna. Like who goes after lasagna?
So you're
I
a
love
Backstreet
lasagna.
Boy.
Yeah, Backstreet Boys,
Right.
Minions,
Yeah.
skinny jeans.
I was trying to explain to a kid in my family what a VHS
Very
tape
upsetting.
was, and they just could not compute like what that is. And I was like, I don't know how to better explain this, but anyways.
Get less existential and get into the moment. I'm getting old, but I still feel young. So, okay, so you started in venture capital or started into the startup space when you were in university still
Yeah.
in 2014. I remember in 2014 was the first year I moved to Toronto, and that's when, were you familiar with TechTO?
Yep.
That's when TechTO was first like getting really going. And I remember the first TechTO event I went to was in 2015, and they had like 30 people there. And by the time the pandemic happened, I was still going like in 2019, let's say, and they had 200, 300, 400 people in these stadiums. And also everyone was popping up incubators at that time. So you really started and saw the rise of the startup ecosystem in Toronto happen.
But I was in Waterloo actually.
Well, that's even better.
Yeah.
No?
So I started, the first 5 years were in Waterloo, and
Yeah.
then I moved to Toronto in, I guess it was 2018.
2018. Okay,
Yeah.
cool.
But I saw TechTO come to Waterloo, and I would come to Toronto all the time. So it was like, as soon as I came to Toronto, I was like, why haven't I been here? Like, there's been so much happening, and I was connected into it, but I was representing for Waterloo. So I'd bring the Toronto crew to Waterloo.
Oh, nice.
And yeah, everyone was starting an incubator, so did I.
Yeah.
You know.
Yeah. Oh, so you started an incubator. Tell us a little bit about that.
Yeah, I started Fierce Founders, which is the first women-focused incubator in Canada. And so that was a spinoff from the boot camp. So we started in 2014 with a boot camp, 6-week boot camp, and the 2 winners both got acquired. So it was like a huge success. And so then we got Fed Dev funding.
Wow.
Yeah.
Great.
So then we were able to do that and just kind of consolidate a lot of that network.
Was this before or after you were working in consulting? Because I did notice that you worked at Deloitte as well.
Yeah, so I was a summer student, and that's when I built the boot camp, but I still went to Deloitte. So I spent some time at Deloitte, and it was only once we got the funding for the accelerator that I went back to Communitech.
Oh, okay. Amazing. And how was your time there?
Well, even there, it was very entrepreneurial. So we actually built Sonnet for Economical
Oh,
while we were there. So we were ahead of the time in terms of direct-to-consumer insurance before deregulation.
was Sonnet like incubated at Deloitte or was it acquired by Deloitte?
It was completely built by Deloitte.
Really?
Yep.
Oh, I didn't know that. Okay, so tell us a little bit about your fund right now. It says you're a general partner at Phoenix Fire. What does being a general partner mean, and what went into your journey in order to start that?
So we really started as thinking about a kind of sidecar fund from the Angel Network, Golden Triangle Angel Network. So I was on the board there for 3 years, and we were thinking about what are the gaps in the ecosystem? How do we support early stage founders? There's a huge gap in early stage funding, angel funding, and all of that.
Particularly in Toronto or just in general, or
Across
Canada?
Canada.
Yeah.
Yeah. And so, like, especially compared to the US.
Why do you think that's the case?
I mean, it's more risky, right? So who has the capital to deploy at that stage? And also you're looking at the fund metrics and you're not getting huge management fees. So the style is always to go bigger and bigger with the fund
That makes sense.
rather than stay smaller and writing smaller checks.
Right. Okay.
Yeah.
Talk to me a little bit more about that.
So basically what we were able to do was build out Archangel. And it's been kind of like almost 7 years in the making. And so as we were looking at what are the gaps, we kind of formed a network between the other angel networks, Southwest Ontario Angels, Golden Triangle Angels, and Angel One, Burlington, London, and Waterloo. And there was a natural formation there because a lot of founders were kind of doing a roadshow and meeting all of those groups. But then as we built out this sidecar fund, it became a fully fledged VC fund where we raised all of the capital from high net worth individuals.
I see. So high net worth individuals being like people that are worth how much?
Well, in order to be accredited angel, you need at least 200K salary or 300 with your partner or $1 million in liquid assets. So a lot of more, say, retired individuals will get into the asset class later on in their careers.
This is so fascinating to a lot of people, especially here, is one, they didn't even know, a lot of people don't even know about the fact that there's these angel investor networks in Ontario. What do they look for when investing? And what are the types of people that would invest in these types of funds?
So you've got the kind of typical angel networks. There's a website, Angel Investors Ontario, that lists them all out. And there are a lot of regional. So a lot of individuals who are from a specific region want to give back to the economic development of that region. So they particularly like to support entrepreneurs with big, grandiose ideas that can build the next BlackBerry, for example.
I see.
Maybe not a great reference now.
No. That won't age well.
They did kick off the smartphone revolution, though, so I'll give them
But
credit for that.
It gave a lot of opportunity for Waterloo,
Yeah.
right?
Yeah.
It had
Yeah.
its moment.
Yeah. What's your role there?
At Archangel?
Yeah.
So as a general partner, I actually have one of the funds. So Archangel is a unique model where we have 4 different theses within the fund. And so mine is specifically focused on women. So I've raised the capital and I'm deploying that capital.
And what are the 4 theses?
So the Phoenix Fire Fund is focused on women. We have all female GPs and LPs.
Love that.
So women giving back to each other and really bringing their perspective to the table. The others, there's a passive sidecar fund called Adrenaline, which is more similar to what I did at Ontario Centres of Innovation with market readiness. So co-investing in the ecosystem and getting into the top tier deals. And then there's 2 other theses. Axion is focused on intellectual property, and Starforge. So you got Adrenaline, Starforge, Phoenix Fire, and Axion. And essentially, they are looking for the best deals, and they've consolidated a lot of the capital within the angel network to be able to deploy larger checks, like 300K.
I got it. Okay. So now the one that you oversee is called Phoenix Fire.
Yes.
And your role as a general partner is to, if I'm understanding this right, raise the funds and find and source deals in order to deploy those funds, correct?
Exactly.
So what goes into raising the funds for people that are interested in this kind of thing?
Well, you have to find people who can actually put that type of capital into this asset class. And so they have to be accredited, they have to be aligned to your thesis, they have to see the potential, and they have to also want to be limited partners, which means they don't make the decisions. So they're saying, here are people who have experience, who have been deploying capital successfully, I want to back them.
This is a daunting task. Like for me, is if I were to do something like that, I would be nervous to like lose people's money. How do you have the confidence in order to do something like that?
So I was able to iterate and test through the Fierce Founders boot camps and accelerators. So I wish I had just started from the beginning because, like I said, the first 2 winners of the very first boot camp both exited. So if we had had that thesis the entire time and invested in those winners, we would have seen a lot of return. So I know the model, I've seen the success rate, and I've seen what makes a successful founder out of those models.
So effectively, your limited partners, they're buying into the model and thesis that you've put together.
Exactly.
You as well, but mainly just that trust in that thesis that you have.
Yeah, like there's processes, there's checks and balances, there's analysis, there's a team. So there's a lot of pieces that go into finding successful founders.
And what goes into developing out the model and thesis and kind of investment process that you guys have?
Yeah, it's important to know that we have 4 general partners. So Diane Wolfenden, who's chair of Equation Angels, Thelzel Lee, who has been running eFund and Vantech in Vancouver for 20 years. So we used a lot of her models as well for how to analyze and bring forward companies effectively, as well as do due diligence on them.
Right. Cool.
What kind of models are we talking about? Are they like more like training models on how to train these entrepreneurs and get them through, or is it more about how to spot the right type of business model and product market fit?
So you want to have like the widest funnel possible to get a pipeline of companies. So she's very well connected into the BC ecosystem. So we know all of the top companies that are fundraising are filtering up into her network. And she's also got great relationships with local incubators and kind of a more non-for-profit angle as well with Vantech. So there's that kind of ecosystem network and engagement piece. And then there's the true fund model where they've passed all those stage gates and now they're in a point where they're discussing and analyzing the company. And so as you're looking at whether this is a viable deal, you're bringing in subject matter experts, external reviewers, people who know the space, and the people who are used to doing these types of early stage deals. So they know where to assess for risk and where to take risks.
Interesting. Have you folks thought about expanding into anywhere in the States?
Maybe as we scale, it's certainly different regulations.
I see. Yeah. Okay. So talk to me a little bit about what you look for in founders. I want to see the things that you think are a big red flag when it comes to a founder that approaches you, and what are the green flags?
Yeah, and then there's some orange and yellow. There's all
Sure.
that, you know.
Yeah, all the spectrum. I'd love to hear about that.
Yeah, so for me, like green flags, I mean, the type of person who'd be good at anything, right? Super smart, super emotionally intelligent, coachable, relatable, really hardworking, all of those things. And you can actually find out a lot about people early on, especially I would have like the boot camp, so I'd spend like 6 weeks with them. So seeing that kind of consistent quality of their work and their delivery and who they are as a human, all of those things play into just being a successful entrepreneur and people buying into your vision and being able to lead a team and continue to be a good leader and learn quickly. So those are the things that I look for, and I get really excited when I meet someone who has those qualities. And then for the red flags, I mean, sometimes why I call them kind of yellow and orange is because it's just a learning, right? So there's things that founders think make them sound good, but then they're not. Like, we don't have any competition. Well, that's actually a bad thing because I want to see that there's a, a market opportunity that people are competing and that you're going to win over the competition, not that you don't have any.
Yeah.
So there's
don't
things
invent your own sport, basically.
Yeah, exactly. Like, it's okay if it's a crowded market. You don't want it to be too crowded. You want to have an opportunity to get that market share. But how are you going to succeed in that? So anything that shows to me that there's an indicator that they're not going to be implementers, that they're not going to be fighting for that market share, being competitive, building a company, they're just relying on, okay, well, we've got the patents, so we own the space. Well, no, you don't own the space with a patent.
Right.
So,
What space? Exactly.
yeah, exactly.
When there is no market.
Exactly.
I see. Okay. And other major red flags that turn you off immediately?
I mean, I think a lot of it comes down to these ineffable qualities of coachability that people talk about. And so I think for me, it's more about like, is this someone I can work with in the long term? Because it's like a marriage half of the time, right? You're talking about maybe 10, 20 years before they have an exit. So it's someone who you really want to work with in a long time. So if they show some early indicators of like a challenging personality who's not, and I don't like to use the wrong terminology for this because I like people who are, disruptors, who aren't agreeable. Those actually make really great qualities in a founder. But can I work with them in the long term? Are they someone who is going to push the right buttons in the ecosystem and make a difference versus just antagonize people?
Right. It's that balance.
Yeah.
That's a fine line to walk.
Yeah. To have like the innovative mindset, but also be thinking like 30 years down the road at the same time.
Yeah, so I see it like more creative.
Yeah.
Yeah.
So why female focused?
So personal experience in terms of the gaps in the market, also an opportunity, right? I'm still an entrepreneur in many ways. And so for me to see that only 2% of venture capital is going to women year over year, in fact, last year was 1.9, it went down.
That's crazy.
Yeah.
Why do you think that's the case?
I think there's a combination of things. I mean, overall, I'm just disappointed in the state of the nation in North America, where we're not as inclusive, multicultural, We've still got a lot of racism, sexism, transphobia. All of these things are still very present in a society that seems to think that it's progressive. So I've been disappointed overall coming back to Canada after kind of building it up in my head. Like,
Right.
yes, I'm Canadian, I'm proud. Oh, wait, this is what it really looks like. So I've wanted to make that kind of social change. So that was important to me, but I want to make it in an impactful, productive way. And I see entrepreneurship as an opportunity where when you support leaders, then the progress and the impact continues through every action that they do in every part of their business. So for me, being able to support women, number one, I enjoy it. It's a great experience. And I find people who I can really connect with and work well with. And then also just being able to see the amount of change that has happened. Even with that first boot camp where, at the time, Communitech had 8% of its startups had female presence on the team.
Wow.
And now it moved quickly to 30% within the first year of Fierce Founders. So that was more nationally number related. So averages were usually around 30% in incubators in Canada. And it's still around that number. But overall, we're seeing more progress. We're seeing more women-specific programming and funding have an impact on the number of women who are getting into the space.
Amazing. Good for you for doing that, because I feel like that's such a big a big gap that needs to be filled, in the sense that if it's actually under sub 2% get funding, like, I don't understand why that's the case at all. Do you think it's a competency thing and access to like education and opportunity, or do you think it's some kind of bias from the people who actually write the checks?
I think it's reflective of a leaky pipeline all the way through. And so if you look at even university grads, right, who's coming out of these sectors? When I started my MBA, I slowly became the only woman in the mergers and acquisitions class, the only one in the Laurier Launchpad program. So for me, it was not only that only 30% of the class were women, but then every step of the way, they were being filtered into things that were more traditionally women. Oh, go to the marketing class, go to human capital. So for me, it was kind of, knowing that I had those skills, feeling confident in my abilities, and doing it anyway. And so I think Canada still has a long way to go in terms of getting those university students, maybe going even younger and thinking about younger girls, like ages 10 to 18. How can we support them and make sure that they're not getting that bias influenced in their career choices?
Canada needs more people like you. Thank you.
Yeah. I really appreciate the action behind it. You guys are actually building a network and a support system and giving money to these groups, to female founders, rather than just what I experienced in university, which was a lot of support for female founders, a lot of support for women in the commerce program or economics, but a lot of it was a lot of talk. It didn't actually manifest into like a system that people could like lean on and start building their career out of. So I do really respect what you guys have been building up.
Very action oriented. And the thing is, it's only been around for a year. So to have this much progress in the last year with Phoenix Fire, and we'll get into the Firehood, then it's been a journey for sure in the last year.
Let's talk about the Firehood now then.
Cool.
So tell us a little bit about that.
So essentially, as we were building out the fund, I was speaking to all the limited partners who were saying, I want to get engaged. I want to have opportunities to mentor and support founders and learn for myself how to be an angel, how to be in venture capital. And so we created that network in order to facilitate a lot of that more educational and networking experience. And now it's just become our, massive way of getting engaged with the ecosystem. And we just got Women Entrepreneurship Strategy funding with Elevate last week of $2.3 million.
Crazy. Wow.
I saw that. Congrats. That's awesome.
Thank you. So we're going to be able to do some big things to build up towards Elevate and then at Elevate itself.
So for founders that are looking to get involved with that, how would they go about, like, is there an application process? How does that work?
Yeah, we're about to launch all of that. So it'll be available. I'd say follow us on socials. We've got, 200 new followers in the last week on LinkedIn. So
That's great.
I'm looking forward to seeing founders follow us on LinkedIn, Twitter, Instagram, and then we'll be sharing how to apply to those programs and get engaged. And we work with so many incubators as well. I'm a part-time advisor with Venture Lab, with Brampton Venture Zone, with Tech Alliance, where we're able to support founders through programming to get them ready for investment.
Cool. I'd like to talk about that a little bit on the education piece. So if someone is an aspiring entrepreneur, what's the best route for them to take in order to maximize their success?
Be resourceful, take advantage of free resources, and learn and get access to the best advisors and best free resources you can early on, so you're not doing it in isolation. Too many founders take it on themselves. They try to be perfectionist about it, and they don't make that same progress because there's a lot of people who can help them at the stages that they're at. So I would say there's a lot of incubators in Canada, a lot of free resources, a lot of grants and pitch competitions, and all of that exposure and experience. You're driving forward your vision, your idea. Find the people who will help you make that a reality.
Okay, cool. Thanks for sharing that. I would love to talk to you a little bit about some founder stories. What are give me like one or two examples of an investment that you've made or the fund's made that is really exciting you right now or has a success story?
Well, I'll share a Fierce Founder story first. Even though those weren't investments, those were just pure grants. We were giving out 100K.
Okay.
But what we were doing was supporting them through the educational program. And so we had some founders who were really struggling in the incubators that they were at before. They weren't getting the pitch coaching that they needed, so they weren't able to articulate their idea. So they had the idea, they knew the problem, they were very analytical and technological about it. But once we went through the program with them and they were able to explain properly exactly what they were doing, that's when they kind of popped out of kind of the cycle of early stage programming. So we saw that happen with a few kind of dark horses through the program. And then also I had one woman who, she was very Russian. She was very much like, this is what we do. And then she would just sit down. And people weren't grabbing onto it. They weren't like linking into it. And so we got her pitch coaching for 3 months, and then she had an oversubscribed round of 1.7, and she just raised another 10 million.
Wow, what was the startup?
It's called Acerta, and it was just analytics for predicting car failure.
Oh, I think I saw that presentation at did she perform at Elevate?
Yeah. So she
very impressive.
She was in the very, very first boot camp.
Yeah.
And then 2 boot camps later, she wasn't making any progress. She wasn't getting into accelerators. She was thinking about building, a fundraise. And so that was when I brought her back into the boot camp. But again, she didn't even get into the top 8. So I'm like, what is going on? There's so much value here. She's such a good founder. And so that's when we just had to double down on the coaching piece.
Yeah, that makes a lot of sense. I think I spoke about her solution like multiple times, like at work or with people that I know, because I was that impressed by it. So that's cool to know the journey from like no one buying into it, because it was like objectively like an extremely good solution.
Yeah, exactly. I got to know a lot of these women when they were still in undergrad, and they were calling me and asking me like, hey, I heard about Fierce Founders. Do you think I'd be able to do it? And I would just chat with them. And I'd have a pipeline, like maybe before they're graduating, like 6 months, but I could see their talent. And so I would spend extra time earlier on. So I'm always about that pipeline, always about building it. And then once they're successful, I'm just happy for them. And it's good to see that kind of impact is like, I'm sure she could have done it without me, but I helped accelerate her progress.
Amazing. Can you tell me about a startup that you particularly worked with that had a difficult time and then came out the other end successful, and what went into them being able to persevere through that?
Great question. I mean, the fundraising process is always difficult. And so, I've seen founders who go into that process and I have no doubt that they're going to be successful, that the company makes sense, that the business is solid. And even to see them struggle with VCs, negotiating, getting turned down time and time again, and just realizing that I think they're the ones who are going to regret it at the end of the day, because this is a huge opportunity. And so then when they're on the other side, they can share their story and help other founders get motivated because they know that it's difficult. So it's not like you're going to find a fit with everyone. You want to meet at least like 100 VCs. You don't want to just...
100?
Yeah, like at least.
Is there even 100 VCs in Ontario?
Yeah.
Yeah, you could do that?
Yeah.
There you go.
You
Just line them all up on Zoom. It's the easiest way to get through that.
Zoom through it.
Yeah.
So for the people that are listening too, can you tell us the stages of raising funds from like the pre-seed stage? Because there's all these terms right now that have erupted. It's not just like seed A, B, C, D anymore.
Yeah.
So can you kind of take us through your POV on that and what stages founders raise funds at and what that looks like at each stage.
For sure. So yeah, there's always new terminology. I mean, this is an evolving market. There's no, science to it in a way. It's more of an art. So, there's the friends and family. Sometimes people add friends, family, and fool to that first round. And so really you're thinking about kind of that soft network that are going to buy into you because they know you, right? So you don't have a lot of traction. You really haven't proven anything. You've barely built a product, but you're going around and saying, hey, I'm de-risking this. I want someone to buy into it. I need that support, that capital support. And also you're assuming that you're going to be successful. So you want the people who will also see that upside, right? Because they bought in first.
And typically, how much is that? Like, how much would you raise at that stage?
I mean, I've seen less than 100K in those rounds too. Maybe closer to something like 250 max. But it depends on how much capital you're raising, what your valuation is already at. Sometimes people have been sitting on these ideas for like 10 years, right? So it's really not even a startup, but it's still only a month old,
Right.
technically. So it's good to just kick things off with an equity round so that you have that kind of experience. It's a steep learning curve just to understand, like, how do I set up my cap table? How do I set up my data room and get all of my documents in order, my shareholders agreement? There's a lot that goes into those first stages of company building, no matter how experienced you are, even getting your website and your branding and all of those things up to date. So you want to have all of that in place. You never want to raise before you even have that. But then you can do a kind of a friends and family, soft circle, get that in. And they're really looking at it from a standpoint of just like core buying into the founder in many ways because you don't have much else to prove.
Right.
Then you're getting into your pre-seed. And so sometimes people do have different terms for it. I've heard micro-seed and, other small terms. And so essentially you're looking at, this is your first equity round. You can get some externals. You want to, for me, it's really a trust building exercise with a lot of net new people who are coming into your network who might want to put in capital. So how are you raising that money? Mostly through high net worth individuals. There's a few smaller rounds. We participate in pre-seed rounds. And you're looking at least a few metrics around your minimum viable product, something that you can showcase as a demo at least to say, here's what we're going to build and this is what it looks like. And then you've got at least a pitch deck that explains the market opportunity, the product solution, the team, all of the competition. And you're just able to cover that in a nice, clear way that produces enough of a vision for people to buy in.
And how much is that check size usually?
So it can be anywhere from 250 to maybe $1 million in Canada. Even that's often small for the US. But a lot of pre-seed rounds these days are looking at somewhere between 750,000.
Okay, and then what's the difference between that and seed, pre-seed and seed?
So seed is a real first raise in many cases. So sometimes founders just raise a seed and they don't do any of the friends and family or pre-seed rounds. But oftentimes they've bootstrapped for too long and now they're trying to negotiate for a valuation that they can't necessarily justify. So you can have true VCs participating in this round. And VCs, the difference between them and angels, for those of you who don't know, angels are the high net worth individuals. They're putting their own capital, while VCs have actually got limited partners, externals who have bought into their thesis, and they're deploying that with like a pre-constructed fund model. So they have less flexibility around where they invest and how they invest.
I see.
Yeah.
Okay. So they're more like the professionals that are investing either like their own or other people's money.
Exactly.
I see.
Yeah. So for that seed round, you're still not really at a like recurrent sales process by any means. You may think you've hit product market fit, but you probably haven't. A lot of founders tend to think that they have before they have. And so you're really still in that iterative testing process around maybe a few pilots, a few key customers, but you're hoping that that can turn into, 10 down the line, right? That what you're doing is proving something that then will be very lucrative for your Series A.
And again, how big is that usually check size?
Like around $1 million to 10 million even.
Wow.
I've seen.
VCs will invest like that before even proving product market fit.
Yeah.
Wow. And what are they looking for then from a leading indicator perspective?
So again, a lot of it comes down to that presentation, right? What are the opportunities? So because we're talking in such kind of more general terms, it could be anywhere from hardware to software, clean tech, med tech. So in terms of a general sense of what could be part of that kind of pitch, it really is being able to articulate a massive market So does this have potential to continue to raise follow-on funding, generate revenue, hire more employees, build your company so that you're at a point where those investors can get those returns?
I see.
Yeah.
Then after that, what are the things that founders are looking for to go Series A, Series B? Because that's like the big money, right?
Yeah, exactly. So then you're looking for recurrent revenue. So there's different metrics that people are looking for, especially when the market went crazy a few years ago and there were massive valuations. There were multiples that didn't even make sense in terms of how much revenue they were generating and how much their valuation was. So overall, I would say, just in a generic term, you're getting to recurrent revenue. You can prove that the unit economics are there. So if an investor is putting in capital, they're going to see those returns. They can see where the sales cycle is going. You can hire more business development, and you can actually build on the current business model.
Love that.
Does that
Is
make
revenue a technical term?
sense? Yeah. Why would you want to be profitable as a business?
Can you talk to me a little bit about that? Because a lot of it's synonymous with venture capital that businesses must not be getting like profitability, right? Or is that changing now?
I think that's very Silicon Valley, and we're Canada. So like we are like all of these kind of broader metrics that I'm speaking about are quite different in Canada than they are in the US. Like we are a different market. We don't see these kinds of crazy deals that fluctuate into unicorns in a year or two. It does take longer. The investors that I have at the table, they do have unicorns in their track records, but those took 20 years. So the reality is we are looking for very viable businesses that can show a profit. And at the end of the day, there's a lot more variability in the early stages where you might get earlier exits. You may get earlier opportunities, and it doesn't need to be this entire VC model of like boom or bust.
Got it. Understood. So I want to talk about a couple other things. We have like 20 minutes left. Some talking points that we got questions about is how do VC funds make money? And how do you like pay the bills under like a venture capital model?
There are management fees, but management fees are often pretty minimal, right? You're looking at a 2% of your annual management fees. So when you're looking at how to build out a VC model, a lot of VCs get into the scale thing where there's a lot of upfront costs. They may raise like a $20, $50 million fund and then get into the $100 million funds and then the $1 billion funds, right? So that tends to be the goal and the style and the scale. And so for me, with the early stage model, we're looking to fill a gap in the ecosystem. So it's much more nuanced in terms of building out something that can be sustainable, which is why we also have the Firehood and we have a model to support education. So it's a much more kind of, I like to say horizontal versus vertical, but then I start to sound like Jeff Goldblum. But essentially saying, how do we support founders at this stage in a unique way with a microfund? So the value of the fund is actually being able to deploy that capital and see that return after 10 or so years.
Okay. Now we've seen an entirely different process, like not process, an entirely different economic environment happen or emerge over the last like year and a half. As interest rates were very low, valuations were very high, and now it's like the complete opposite with interest rates continuously going up, and founders are seeing themselves either getting less of a valuation right now, not raising money at all, or like having these like down rounds that a lot of people are seeing.
It's maybe the largest drop in tech in like 20 years or so, since 2001.
The last real, exactly, I was going to say the last real like tech downturn that we've seen is in 2001, 2000. So how do founders navigate this right now? I'd love your perspective on it in general, and then how like founders should navigate this kind of thing.
Yeah, very fair. So obviously, like it was pretty boom and bust in a way, the extreme high valuations that were taking place in the last few years. So in some ways, it does feel a little bit right-sided actually versus like downsided. So I would say the opportunities that are viable are still very much getting investment. So if you've got a viable business, and in many ways, this is actually the best time to invest because you're going to see that upside over time. So solving problems and taking on challenges is what entrepreneurship is all about. So if they see these opportunities and they're building something that's viable for that, there's certainly people who have the capital to be able to make that impact.
Yep. One of the ways that I would frame it, economically is that the companies that have like good fundamental unit economics, good operating margins, they're like a well-oiled machine. You know, the boat was built before the tide of the interest rates started to raise. They actually almost become more valuable in a sense because you're able to lend them money and they actually are able to pay it back versus a lot of other companies can't do that for the technical term of revenue that we just talked about. But
Right.
to your point, the viable businesses probably will do well. When everyone and their competition might actually end up cleaning house because they won't be able to survive from like an accounting perspective.
Yeah, like I've heard from VCs that they're certainly looking at, placing more strategic bets. So they're not kind of making it rain all over the place. But overall, there are certainly opportunities, and those opportunities need that double down support. So we're seeing like longer runway expectations, like 24 months versus, 16, 18, because we know that there's going to be less money available to them in the near term.
Okay. Any advice for founders during this period of time?
Yeah, I mean, still build your network. Like, at least, we're kind of at the end of winter. So go to networking events, meet people, build relationships, start fundraising. Don't ever be not looking for money. That's a lot of negatives. But, they need to be able to sell both their business to investors and to customers. And so always be on track to stick to the fundamentals of what you're building and make sure that that's viable at every turn.
Where do you see venture capital going in the next 5 years? Because obviously things are very uncertain right now. What is your outlook on that?
I think we need to see more different opportunities too, right? So not just the kind of go-to model in venture capital, which we're seeing in Canada, where it's like you're building these funds with a lot of institutional capital, even from government funding.
Right.
And I think we need to start testing different models of financing. There's a lot of unique models in the US, and we haven't even tested them here.
Why do you think that's the case?
I think a lot of them have government funding, right? So there's that kind of stem of who's putting in the capital, who are the majority of the limited partners for venture capital funds. Mm-hmm. So everyone focuses on VC, but where is VC money coming from? And so if you think about that pathway, you'll see who's influencing all of their, theses, the way that they invest, who they can invest in, and how they're structuring their funds.
How so? It's coming from mainly institutional?
Yeah.
Yeah, because I guess if the money's coming from institutions, they're going to be more conservative or particular about what they invest in.
Yeah, and so you're looking at, what succeeded in the past and just implement that.
Right.
Versus testing and building a unique investment thesis.
There's a lot of money that can be made in just bringing things from abroad into Canada, which is, I think, where people like you and I have an interesting perspective. Having grown up abroad, we have all these ideas that we know exist and work.
Yeah, exactly.
The question is, how can we end up bringing these to Canada? Have you found any viable path forward for doing that, or do you think it's a broader cultural thing, regulatory thing?
Yeah, I think it's a broader cultural and regulatory thing. So there's only so many things you can take on at once.
Yeah.
So it's like, where do you want to make that impact? And so I think if you spent more time in the U.S., you've got a ton of options there, and it's right there. We're pretty close by. So I think we could spend more time looking at, revenue-based financing options, other options. I know you love that word, revenue. So thinking about
Still don't know what it means.
No, thinking about how to structure it out so that you can use those models and prove them, and the research is there, and we can make them viable in Canada too.
Love that. How has growing up internationally influenced your career here in Canada and your POV on startups and just the ecosystem itself?
Yeah, I think I do tend to have a more global perspective. I don't get into I think the weeds of local communities. I'm always thinking broader. So I know there's a big world out there, and I know that founders need to know it. And so every once in a while I'll hear things like, well, I'm expanding from Waterloo to Guelph. And I'm just
Wow.
Yes, that cut you deep, didn't it?
Yeah.
That just hurts. And so for me, it's maybe there's ways we can create paths for people to build their perspective. But the nice thing about Canada is we already have so many people who have those global perspectives.
Yeah.
So I think just tapping into that talent and enabling it here can then bring those markets closer together so that we're bringing more of Canadian technologies to India and China, Europe and Africa. And we've got such an incredible talent that's coming here anyway. So being able to foster that here as a starting point will really help build Canada up globally. And I think we've got a huge opportunity to do that.
I think so.
What I really hope to see is expats like us that still live outside of the country helping Canadian founders expand globally. Start, using the Canadian diaspora to breed some born global firms, so that what it means to be a founder in Canada is not just that you have the Canadian market, but you have the full Canadian citizenry globally that is willing to back you. We don't have processes set up for that really yet, but I think that it's a bigger opportunity, both as an immigrant country and an immigrant country.
I agree. I think there's like this natural bias for Canadians to just like think in our little bubble. And I think a big opportunity for Canada in general is to think a little bit bigger and to create companies that can expand globally and be dominant, not just in Canada, but in other countries.
Yeah. I think I have like a unique perspective in that I have both. Like, I don't have a passport from any other country except Canada. My whole family is here. So my parents were the ones who kind of took that risk to say, okay, yeah, we're going to go to, Namibia. And so for me to have these like deep connections to Canada, where I came back every summer and went to the cottage and went to, Muskoka camp and got to know local Canadians and feel that kind of sense of, community. Rural communities have a very different perspective than urban. And so knowing who those people are and what the opportunity is and building that out and building their perspectives. I think the nice thing about Canada is that people are very open to that. I don't see a lot of resistance. I just see a lack of access. And access is something we can provide.
Yeah. What are 2 or 3 sectors that you're excited about or interested in that are emerging in the next like 5 to 10 years?
I was always really focused on the environment and sustainability. So to see the amount of buy-in into clean and climate has been huge. And I'm really excited about the opportunities for more funds to invest and more companies to come forward with their solutions. So I don't always know what all the solutions are, but I know when I see an opportunity. And so I'm seeing a lot of those. We're also seeing a lot of cybersecurity threats. So we're getting some really good deals in that sector. Then they're also able to bring that knowledge globally as well. So even some of the early stage companies we've invested in cybersecurity are already going international very quickly.
Love that.
Yeah. So those are definitely 2 big ones. And then I would say femtech as well. So we're seeing more and more investment in women's health, and that's been a huge gap. And so it's great to see other initiatives that I can support rather than always being the one to start it.
Right.
So there's a new femtech initiative, and so I'll bring my network of Firehood angels, and they're really keen to invest. And I'll just say something fun, which is, I know I brought all these women forward and together, but I didn't realize like they'd like girlier things sometimes.
What do you mean by that?
Like they like that like hair technology and clothing technology and nails. So I think that's just kind of fun, right? Bringing new perspectives and allowing women to be women or to be girly and to enjoy the things that they enjoy, right? And having that sense of expression too.
Chanel vibes.
Yeah.
Okay, so we'll wrap up here. I'll ask the last question, which is something that we ask to everyone at the end of an episode. And it's, what is one piece of wisdom that you wish you knew much sooner? What's one piece of knowledge or wisdom that you now have that you wish you knew much sooner?
I think if you're going to go that extra mile for yourself. Build something that you're generating equity in for yourself. So I feel like I went around the ecosystem, built a lot of things for other people, and that's why I had to take a step back and build Phoenix Fire in the Firehood and build my own entity and my own brand. And so I feel like founders take that risk and they do that. If you're going to head down that path, just do it sooner.
Love that. Thank you so much for being on the episode. You are an absolute pleasure. Kieran, thank you so much.
No worries, Mike.
I do want to say that just before we're just going to wrap up here, where can people connect with you, find you online?
So I have my Twitter handle, Danielle B. Graham. I also have all of the Firehood handles, so it'd be great if people follow, and I'm always behind the scenes on those.
I'll definitely be following your journey. I'll follow you all over the place and see how things go, and I'd love to have you on the podcast again sometime.
Absolutely. Thank you.
Thank you, everyone, for listening. Until next time.